Welcome to Finance with Shahrukh. On this channel, we talk about finance and the economy in simple terms. Let's begin. Imagine waking up one morning. Bitcoin is near $74,000. Everyone on social media is screaming, new all-time highs are coming. Retail traders are buying, influencers are posting rocket emojis, but behind the scenes, something very different is happening. The US dollar is surging, global tensions are rising, and a $1.7 billion signal just flashed in the crypto market. A signal that historically appears right before massive volatility. The question is Bitcoin preparing for a breakout? So, is $74K actually a trap? Let's break it down. The first thing to consider is the opportunity cost. First, we need to understand why $74,000 matters so much. In financial markets, certain price levels become psychological magnets. For Bitcoin right now, $74K is one of them. Here's why. When Bitcoin approaches major resistance levels, three groups enter the market at the same time. The retail traders are chasing the breakout. Short sellers are betting on a rejection. Whales and institutions are positioning quietly. This creates something called liquidity concentration. In simple terms, a huge amount of stop loss and leverage positions start building around the same price. And when liquidity piles up, markets often move violently because big players don't chase price, they hunt liquidity. The $1.7 billion signal. Now let's talk about the signal almost nobody is discussing. According to derivatives data, over $1.7 billion worth of leverage positions are currently sitting near the $74K zone. These are traders using leverage, borrowed money, to amplify their bets. But leverage is dangerous, because if price moves even slightly in the wrong direction, exchanges automatically liquidate those positions. This is called forced selling. And when billions in leverage get liquidated, it triggers something known as a liquidation cascade. Here's what that looks like. Price drops slightly, liquidations start. Those liquidations push the price lower, which triggers more liquidations. And suddenly, a small move becomes a massive crash in minutes. We've seen this happen dozens of times in crypto history. Global war tensions and risk markets, but crypto isn't moving in isolation. Right now, global markets are reacting to rising geopolitical tensions. Whenever the world moves closer to conflict or war, investors shift their money. They move away from risky assets like crypto and tech stocks, and towards safe assets like cash, gold, and government bonds. This is called a risk-off environment. In a risk-off market, liquidity disappears, volatility increases, and speculative assets like Bitcoin become extremely sensitive to macro news, which means even a small geopolitical shock can trigger a huge move in crypto markets. The surging US dollar. Now here's the second major force pressuring Bitcoin. The US dollar is getting stronger, and historically, a strong dollar is bad for Bitcoin. Here's why. Global liquidity often moves in the opposite direction of the dollar. When the dollar rises, international investors hold more cash, global liquidity tightens, risk assets lose momentum. This relationship has appeared again and again. When the dollar index surges, crypto markets often struggle, and right now, that exact scenario is unfolding. What whales may be doing while retail traders are celebrating $74K excitement, large players may be preparing something else. Whales don't buy when everyone is bullish. They buy when liquidity is available. And one of the easiest ways to access liquidity during liquidation events, if billions of dollars in leveraged longs get wiped out, whales can scoop up Bitcoin at discounted prices. This is one reason crypto markets often experience sudden crashes, rapid recoveries, and extreme volatility. It's not always panic. Sometimes it's strategic positioning. Bitcoin has always been a market of extremes. Extreme optimism, extreme fear, and extreme volatility. The traders who survive aren't the ones who chase hype. They're the ones who understand structure, liquidity, and risk. Because in crypto, price tells the story everyone sees, but liquidity tells the story that actually matters. On right now, the liquidity around $74,000 might be the most important signal in the entire market. That's all for today. If you liked the video, please like and subscribe. See you in the next one.